Elon's there already, and he's back in the news today for a different reason, not necessarily for politics, but for business. How about that? Reportedly, in talks with investors for another round of funding, or for a round of funding for X at a valuation, okay, of $44 billion, which would be the same price he paid for the company when it was known as Twitter. And I think that would be good news for Musk, because it would be a much higher valuation than some on Wall Street were thinking when they were looking at this company. So we will see how it goes. Doug Flynn from Flynn Zito Capital Management joins us with more on that. Is that right, Doug? How do you see the company? Because that was the knock on Musk, was that, you know, he bought it and he ran it into the ground, but maybe not. Maybe now it's getting turned around. What's going on? Do we know at X?
I think so. I think what happened was, when they had the initial advertiser boycott when he bought it, some were estimating that the valuation went down to maybe even somewhere between 10 and 20 billion. But he's gotten about 90% of his top 100 advertisers back. Some companies have said they're increasing their advertising. And what happened was, if you think about it, whatever they were spending before with their current employees, he cut expenses by about 75%. So even though they did lose about half of the revenue that they had, if you are down 50% in revenue, but you're down 75% in expenses, you're actually more profitable now than you were when he bought it. And so people are seeing that, and they're also seeing that it owns a multi-billion-dollar stake in the XAI. So, you know, probably the same valuation's fair. And I think if they can now drive the top line with even more advertising with that lower expense base, the valuation probably will move forward.
Yeah, XAI is interesting. It's Grok integrated into X, and they just coming out with this the third version of that. So we'll see. You and I talk about trade all the time, tariffs and the like. So one more headline for you today, and this is the headline. The United States was Germany's biggest single trading partner last year, first time since 2015, taking the place of China. Kind of an interesting headline given everything that's going on in global trade. Any interpretation?
Yeah, Guten Tag, by the way. I just want to bring that out. Thanks. Yeah, I think what happened was, Germany's not, you know, they're the largest economy in Europe, but they have had basically no growth as an economy the last 5 years. The last 2 years, they've been in a recession. And so even though their exports have increased to us, and the imports from us to them have gone down, China's has gone down much farther, which is what moved us back up. And that's because China is just getting more competitive and making a lot of their own stuff. So Germany has a lot of problems with it. They're down hundreds of thousands of jobs in manufacturing. And so, you know, Trump doesn't like to see that the trade deficit's getting worse with a country like that. But they're not in a very strong state. Now, they have elections coming up. They're going to have to do some things. But the U.S. is in a pretty good situation to negotiate with them, because the trade deficit is working, you know, towards them against us. And I'm sure he wants to right-size that. So, and they're not in the strongest sense right now. So that doesn't, you know, put you in the best position for negotiating. But whoever wins here in the election is going to have to negotiate, you know, trade with Trump.
Those elections, actually, you're right. Those will be very interesting to watch. Thank you, Doug. It's closing bell time.